So welcome back, everyone. I hope you're fine and well, and I hope we all slept well. So it's another session of our market overview, top trade setup, and then trading signals. So without further ado, guys, let's jump straight into this session properly. So first off, we had this Euro GBP trade running, and right now it's currently in a drawdown. Okay, just as advised, some of us have closed the trade. Even I personally, I only have it open on a single account and I have it very small in a very small position. And why did we close this trade? Number one, because it has crossed below this trend line, and that's more like it. Number two, why do I still have this trade open? Because it stays above the structure, all right, and it's also above this 250 period moving average, indicating buy. Okay, so just because if you're not comfortable holding it, or maybe you're just done with the pressure, because at the point we were up here, it came back down, went back up, came down, up again, and then it's just coming down. So this is a lot of drama, to be honest. Okay, so and personally, I don't think it deserves it. It's Euro GBP common. It's not Euro dollar, all right? And it's not a trending pair. That's the last part I'm going to talk about. It's not a trending pair per se. You will hardly see it do pullback, okay? Except once in a while that you have something like this. Okay, you can see this kind of drama. Okay, this might be like from the 30th of May to the 1st of June. Imagine a month drama. This is a straight 1 month drama. The fact that we took this profit last week, okay, this very beautiful profit, $13, $50, $20, $11, $7, and the likes. Because we took it, doesn't mean it doesn't remove the fact that it's a very weird pair. Okay, so we should be careful. At the same time, when it's giving us money, we should be there to take it. All right. So it's as simple as that. So any loss that any one of us cancel today is smaller compared to the profit you took from it last week, unless you didn't pick that trade last week. Then you might be like, okay, maybe I join when the market is almost done. So all of that explained, let's quickly talk about our YouTube channel. We're still it's a little low. We have a low 100 subscribers, and I really want you guys to help me take it to 100 subscribers at least. So if you have a friend that you want to improve his life, or you want him to also join the winning team, you can share the link. It's been sent to the channel. It's been sent to the chat box. Okay. So thank you for doing that. Now, moving further to the fundamentals we have today. So this morning, 4:30 and 5:30 a.m. Between 4:30 and 5:30 a.m., we have the Australian dollar cash rate, Reserve Bank of Australia monetary policy statement, and Reserve Bank of Australia rate statement. This is all about interest rates. Okay, so this is all about interest rate, and the market was actually forecasting an unchanged interest rate. You can see it remained the same. That's why we didn't see that much of impact when the news was dropped this morning, right? When it was dropped, and we're going to check it again later when we jump into the technical part of the session. All right, and then despite the press conference, I mean, when the data was unchanged, yeah, that's fair. But and even during the press conference, there were nothing. The market was just calm and collected. All right, there were nothing, literally nothing. There were no move, there were no push, there were no pump in the market at all. That's quite, it's surreal. It's something that doesn't happen all the time, but it is what it is. Okay, that's what the market has done to. Anyways, so 3:45 p.m. today we have the United States Final Service PMI. At 4 p.m. today we have ISM Service PMI. And then all day, every day today is the grand finale of US presidential election and congressional elections. Woo! I hope someone is happy. We are 7 hours behind. Okay, or let's say United States is 7 hours behind, or we are ahead of them with 7 to 8 hours. Okay, in diverse. So we're ahead of them 7 to 8 hours. So before, let's say by give or take, 2 a.m. Nigerian time, if you're all by then, there should be a result, okay, for the presidential and congressional election. I'm very sure nobody actually cares about the congressional election, but what we don't know is the Congress that actually owns the country, okay? Because every single thing has to pass through Congress. But is the president? Yeah, the president has a lot to do. They have a lot of decisions to be made. And yeah, I think they have bigger influence on the Congress as well. But at the same time, yeah, if the Congress doesn't like a president, most of his bills won't go through. So we should also pay close attention to the Congress as well. But at the same time, the biggest one is presidential election everywhere in the world. Okay, because they are the one that we stand at the top. They are the number one citizen of a particular country. So lastly, by 10:45 p.m., we have unemployment change, quarterly employment change and unemployment rate in New Zealand. I think this is going to be very dicey and we should pay close attention to it. So today, the only data that is coming with forecast are the final PMI and the ISM service PMI, and then the employment change and the unemployment rate in the New Zealand dollar. So let's keep close up on these two. The remaining ones, we can't forecast it. The market doesn't have any idea how it's going to play out. And as of now, there's still no distinctive leader or a leading party in the United States that we can say, yes, is going to win the election. So fingers crossed, IP on CNN and wherever you get your media from or your information from. And we see how it goes. Let the best team should win or something. Moving forward to technical part anyways. So starting with DXY this morning, like we always do every day, all day, every day. First thing you will notice is that this gap is still there. It's not been filled. I guess it might be there for a longer period. And genuinely, something is still telling me that that gap will be filled on DXY. But when will it be filled? I hope it's not when I took a buy on euro dollar that the gap will now find its own time to start filling up. Because the moment DXY turn up, all the buy trade we are going to take on euro dollar will definitely hit stop loss. And that is something that is quite concerning to me right now. All right. It's very concerning. But whatever happens, I guess we see, isn't it? We see how it goes. So that said, the best plan now is to just be patient to see how the XY go. And we have a shot at buying euro dollar right now. And I think we should take it. What do you guys think? I think we should take it. This buy right there, I think we should take it. It makes sense. It makes absolute sense. It fits into our system accurately. So no excuse, guys. We are taking this buy. So I'm gonna download it right now. I'm gonna share it with you. So yeah, this is the take profit one at the top here. This is the stop loss right at the bottom here. Okay. I think we should. But that gap will definitely get free. All right. I mean, so it is a conundrum, to be honest. All right. So you want to risk very little on this one. All right. You see this fair value gap also. I think it's going to get free. Should we take it? Yes, we are taking it. I'm taking it. I don't know about you, but definitely I'm taking it. All right. So yeah. Download image. So I will be taking this trade for sure. And we see how it goes. Forget, guys, there's this gap right here on euro dollar that might get filled. All right, that might get filled. And this is the gap I'm talking about. This gap right here. All right, so it could get filled or not. We don't know. But the setup is quite interesting. That's what I know. Okay, the setup is very interesting. It looks really good. All right, we have our zigzag pattern already. Okay, we have higher high, higher low, higher high, higher low. We have a crossover. We have the market below the 50 level, RSI 50 level. I still don't know what this thing is called. Right? Is this below 50 level or above 50 level or at oversold or whatever? Just take it as it is. All right. So it's below RSI 50 level. RSI 50 level. That doesn't sound cool, but at least it makes sense in a little way. All right. And we're targeting how many pips is that? 67 pips. We are only risking something around 20 pips. So that's more like 1:3.36. Okay, that's more like 1:3.36. So if you lose this trade, it's just $20 loss. And if you win it, that's around $8 to $7 loss. Okay, $7 to $8 profit, excuse me. So which is fine. That's if you use the smallest lot size. Okay, 0.01, $2 loss and $6 to $7 to $8 profit. So that is that. So let's keep a close tab on it. USDCHF, on the other hand, I was planning to take a sell later today if the market crossed below here. The only caveat, or let's say the only issue I have with USDCHF is the fact that all this right here could be what? Could be a false breakout. It could be a fake out because the market was ranging and it just broke out right here. Pullback is nice. So if it continues to come down, then that will be very decent. If it doesn't, I guess maybe the market is not just ready just yet. Okay, so let's see how this goes. I'm not in this trade yet. I will actually be very careful because I told you that this is how I trade inside a range. Okay, this is how I trade a range breakout. Let's assume this is a range. This is an education session. Okay, so let's see. So pay close attention to it. All right, you might learn one or two things. So let's assume the market is ranging like this. Okay, market is ranging like this. Okay, I think this I shouldn't have drawn it too long. Okay, anyways, I'm coming. Let me see if I can extend it a little bit. Okay, yeah, that's fine. So now let's assume the market is ranging, okay, and then you want to take it, you want to trade a breakout. Why the market is ranging like this? Okay, you want to see what a build up, okay, a build up towards the breakout. Okay, you want to see the lower low, lower high, lower low, lower high. Then if the market now break out, and then we have another pullback, then you know that this is what you should be able to do what to draw a trend line. Okay, if you can draw a trend line and market breakout, pull back, retesting that trend line, then you get the rebound from that place. You can start taking a sell moving forward. All right, but this build up must happen. So moving forward, this is still not clear yet. Okay, if it's a fake out or a breakout, as you can see right at the top where we've had a couple of fake outs in the past couple of weeks. Okay, you've seen a lot, right? So this might be another fake out. We don't know. My plan is right below here. If it looks good enough, I might consider it. But if it doesn't, I guess I will leave it to fly. All right. So USD on the other hand, we also broke out and then it's going back inside the range right now, as you can see. It's just a slight breakout anyways, something like this, okay, at the bottom here. So it's not a slight breakout, but it has broken the trend line, which is the first stage. Now, the second stage is I want to see it break this structure decisively, pull back nicely, and then drop down. All right. And you can see what I'm saying also right here. You can see that we have the build up right from inside the range, right? This is the kind of breakout that I will consider. All right. If you pull back nicely to this zone, then I will take this sell. All right, so you can see lower low, lower high, lower low, lower high, lower low, lower high. I will take the sell right at the top there and then all the way down there, back towards the daily resistance. So that would be something I would consider because the build-up is already there. It's not something like I won't take this one if this is the breakout. Actually, if this is the breakout, lower low, lower high, lower low, lower high, I'll even consider this one. All right. But if the market breakout like this, higher high, higher low, I might not consider it. But the reason I would consider it is because it's already a break of structure already. So it is just a continuation of the trend. All right. But I'm very sure with the explanation I did on USDHF, you understand what I'm trying to say. Okay. So moving forward, USDJPY right now, it's still being watched by me, but as of now, the market is still quite bullish. Okay, it's still quite bullish. Why? Because the moving average crossover hasn't happened yet. The 200 period moving average is still below, with the 50 period indicating a bullish momentum. Okay, indicating a bullish trend. All right. So until that happens, the crossover happens, and I get a pullback, then that's when time I will consider a sell. And the market fortunately break above there, pullback. I guess we continue to do what? To buy USD JPY. And take a look at Euro GBP. Let's assume some of you guys here were saying, I'm still holding on Friday. Okay. When I said we should close our trade, I think somewhere around there. So my viewer like, I'm still holding. And I said, close it. Imagine you were still holding this trade. You see what happened day after that. This would have been very crazy. I mean, your psychology would have been a little bit messed up. You have been everywhere. Okay. So but if we were risking around 25 pips, and this was around 67 to 75 pips profit. So you should, even if you want to trail it, put your stop loss at least above the entry. And if you had done that, this trade would have closed you out at just tiny profit. If you didn't follow my instruction, I knew very well, I knew EuroGBP is not the best pair. Okay. At a point in time, I personally hated this pair. All right. But because sometimes you just have to like give grace to the pair, let it do its own thing. Just make sure you don't fixate on it and you don't stare at it 100%. Okay. Look at some other things, do some other things, and then make some very good decisions when you are in the market. That is why I'm saying what I said on euro dollar. So moving forward to Aussie dollar, like I said again, I don't care if I have to repeat myself again and again and again and again. I just need you guys to understand me to make sure we are doing the same thing. Okay, that is the only thing that will give me joy and that will make me happy. And that will make me feel fulfilled that I'm not pushing you guys to lose the money. At the same time, you're learning and you're making money while you do that, okay, in the market slowly. Okay, slowly. You see, we're not talking about $1,000 profit, $3,000 profit right here. Take it slow and steady. Okay, by the time you now start trading all this big account, 100K, 500K, then you're implementing the same thing. You're just increasing your lot size. It's simple as that. You're doing the same thing. You don't need to change anything because I was trading $100 before, and now I'm trading $100,000. Now I have to change my system. No, you have to trade the same system but with different lot size. If you're using 0.01 before, then you might want to start using 10 standard lots. Do you understand what I'm saying? So I think I have to rush now. So this session won't be long and the video won't be too long. Aussie dollar, yeah, it's not ready. I mean, definitely it's not ready. The moving average crossover is not done yet. You can even see we are very close to overbought. Okay, RSI is very close to overbought. So right here, let's wait for the market to go up. All right, give it time. Let it break up, let it go up, and then let it come down. All right, once it does that, that's when we now start looking forward a possible buy opportunity. On that note, we have to sit and wait for all of that to play out. At the same time, the sell opportunity is still very active until what? Until we get a decent breakout, pull back, the crossover, and the market do what? The market at what? At oversold. Those three things must happen. Once we get those three things, we're able to go for a buy. If they don't happen, I guess we have to stay sit and watch the market build up very nicely on Aussie dollar. Kiwi dollar is the same thing. Okay, you can see the moving average is not yet over. The structure is still there, quite at the top. All right, the market still seems to be ranging. Okay, and you can see that this divergence we saw that other time, I think it was on Monday, it now happens to be what? Okay, now it happens to work actually. Because I said the reason why I don't want us to take that short position is because of this particular divergence. And right now, it was a good decision, even though we still took that sell trade anyway, and we lose just a very small amount of money. But at the same time, I'm glad that it worked. That once I see a divergence the next time, that is signaling that the trend is almost what? The trend is almost over. So pound USD, on the other hand, it is also going back up. Imagine we took a sell at the break below here. That would have been a very bit of a drawdown. That's why I don't trade inside the range. And also, there's a little bit of a divergence right here also. Okay, even though it's a long one, but it's a divergence nonetheless. Okay, we have lower low and we have lower high. Okay, this low right here is lower than this low and this low. All right. So we have a little bit of divergence there. And despite that, we still have a new lower low, but the market seems to be changing structure. Okay, it's changing character soon, slowly. So we just have to be patient. I think let's go to 2 hours. This is why I like to analyze in 2 hours so you can see the chart very clearly and much better. So right now, the plan is to wait and see if we can get the pound dollar to break above here and pull back. Okay, you can also see that we are seeing a little bit of a structure right here gradually. Okay, higher high, higher low, higher high, higher low, higher high, higher low. We start taking our buy from here, and there is no room at the top to go. All right, at least this place right here will be a very best place to target for a buy before we can now consider maybe selling again. All right, and why did I say that? Okay, you might ask, why did I say that? Why was I expecting? Ah, good Lord. You might ask, why was I expecting the market to come up here at least before it starts going down? Okay, before it starts going back down. It's because we had a very chubby move since. Okay, we have a very chubby move, and now it's just normal for the market to pull back a little bit. Don't forget, for every downpour, there will be a pullback. Okay, for every downpour, there will be a pullback to the upside. For every spike, there will be a what? A downpour as a pullback. Okay, for every A, B, C, D, okay, which is 5 wave, 1, 2, 3, 4, 5. Okay, I think this is 5 wave anyways. 0, 1, 2, 3, 4, 5. Okay, there will always be what? A, B, C pullback. All right, that's how it goes in the market. And this Dow House theory and Elliott wave theory, they're all kind of like fixed into each other, right? So that about that. So let's see how this goes, pound dollar. I'm looking into buying, but I want to see some structure broken. I want to see crossover, and I want the RSI indicator. I want it to be far away from overbought and very close to oversold. That's where I will now start looking for buy opportunity. Okay, I hope you guys are still following me. Please kindly drop me in the chat box if you are still following me and you're still here with me. So moving forward to USD CAD. Okay, yes. It wasn't on USD it was on USD CAD, the divergence I was talking about earlier. All right, you can see right at the top here, we had higher high, right? A very steep higher high. And right at the bottom, we have a little bit of lower highs. All right, that is divergence. However, and some people might even call this a wedge pattern. And that is why I'm considering selling. I'm not going to take a sell right here. Why? Because it is still above the moving average. Okay. This is the conundrum I've always found myself. And one thing is, it has always keep me away from riding the longest trend. That's number one. That's the con on this strategy, using moving average as area of confidence for me. It keeps me from riding the trend early. Okay. Early trend is enough. All right. And then it keeps me also from what? From fake entry, bad entry. All right. These are the pros. And also it makes my work easier. Okay. If I'm not here with you guys, if I don't have to explain all of this, I will just put a notification right below here. I know by the time the market moves down here, pull back, the moving average will have corrected itself. And I'll be looking for short opportunity. Okay. So it makes my job easier. You can see for the past 3 months now, I'm not using moving averages. I started putting it right here because the year is almost over, and I need a clear direction of the market. Okay, I need a clear direction of the market. That's why it is right there. Tomorrow, I might remove it. Okay, the more we jump into those trends, we start riding those trends, I will remove it. There's no point again. We can also just enjoy structures, higher high, higher low, support, resistance, demand, supply, trend line. Those will capture the whole thing. But right now that the market is still formulating, what we are trying to take now is counter trend, right? Counter trend. We want to counter this bullish trend, this very crazy bullish trend. That's what we're going to counter. Then I need my moving average. I need it to be on the chart, 100%. Okay, once we are done and we see a very clear lower low, lower high, lower low, and I can draw my trend line, I will remove the moving average. I don't need it again. I can easily do what? Just forecast the pullback with Fibonacci, and then I can easily do what? Ride the next wave. Okay, that's why you can see the moving averages right there. Someone said, Sir, can I get your video that explain more about RSI? I definitely have a video on RSI, but what I'm trying to do is I want to record all those videos, okay, and put them on our YouTube channel. Okay, they are still being recorded every day, so just remain calm. Once they are ready, I'll push all of them once, okay. But for now, let's just and on Thursday you can also join us. We are currently on indicator, okay, technical indicator, how you can use it and you can trade with it. So that will also help you if you join. And I think I do think you do join. I mean, I'm thinking you join our training session, but I'm not so certain because some of you use different names, but some of you join and anyways. So that's that. But you will learn a couple more. And even from this session, you can see I've explained so many times why I use RSI, why I use moving averages, and what I do with them and the way I do with them. Okay, I do join. That's very good then. Okay, now moving forward. So on USD card, I'm still waiting, all right, because this structure is still very solid. And if you even change the time frame to 1 hour, you will see that the moving average is still yet to cross, even on the 1 hour time frame, which is our entry time frame. So we've got to be very patient. The fact that the market touches this place doesn't mean it's ready yet. And if we can now get a deeper pullback, that would be good because that would put a lot of selling pressure into moving average to converge together and cross. Well, I'm not going to take that sell trade here. I want to see this major structure broken. Once it's broken, pull back, that's when I'll start looking for what? A very good sell opportunity moving forward. And if you check our euro dollar trade right now, we should be up like maybe, 3 to 4 pips. Okay, in profit. It's good, even though it's still young. And it's nothing, but it's a plus, isn't it? It's a plus. So moving forward to the last, second to the last pair, which is gold. So gold right here is still playing chicken. You can see we have a crossover. I mean, are we about to witness? Are we about to witness the reversal of gold? Because so far so good, the Middle East conflict is, I think, it's slimming down gradually, or maybe they just want the U.S. election to be over to know who won and who lose so they can continue to bombard themselves with a lot of missiles and more. I think that's what they're doing. They're just relaxing to see who is going to win. So who are we going to start asking for money? Who is going to start helping us with, aids, military aids and everything so we can continue with our act or our whatever. I think that might be what's going on. I'm being speculative right now. I'm not sure. Okay, like I said, I'm not a geopolitical analyst or whatever. I'm just a trader that know one or two things about almost everything. Okay, so that's what I'm trying to say. But so far, so good. So far, it stays above here. As a matter of fact, so far gold remain above here. I think it's still bullish. Okay, if it keeps its stance, and it remains above here, I want to believe it is still what? It is still very, very much bullish. So we just have to pay close attention to the momentum moving forward and see how it goes. Despite the fact that the crossover happens, I would still like to see what this structure getting destroyed, getting retested, and then we might now target the next thing. Definitely, if this happens, 2685 can't hold it. We see gold probably at 2500. Okay, somewhere below here, right? So let me quickly let me do a little bit of detour back to 8 hour time frame so you can sort of say, yes, somewhere below here, we might get gold around this zone, or maybe possibly around this zone right here. Yeah, something like that. We might get gold around this zone. Okay. So that would be very good, but I want to see it come, break out, pull back, and then, start dropping down. But this place will definitely pose a challenge, this particular structure right at the top here. So we have to pay attention. And if all of this is broken, oh boy, all the way down to 2400 there. Okay, which is very possible because definitely gold will continue to go up forever. At a point, it will pull back. It will do a very deep pullback. Even the likes of S&P 500 and DAX 40, the likes of the stock index that we know will always be bullish. Sometimes they also do deeper pullback. So gold will definitely do it, but we don't know when, and we don't know how. All right. So we have to be very patient. Is there an opportunity to counter trade on gold right now? No, please don't. All right, please don't. I'm begging you, please don't. Okay, don't counter trade on gold now. Another fact, I have a very tiny position on gold right now, just a buy right here to see how it goes. It almost closed this, even almost closed me out yesterday, right below here. But if you have a very good stop loss, I guess to catch the trade. So I will advise you not to do that. Okay, don't counter trend this. Don't counter this bullish trend right now. It's not over yet. Okay, until this major structure is broken. At least this immediate structure is broken, and we get a crossover on the 2 hour time frame. 2 hour is like a very strong time frame. Just for my confirmation, if I get a crossover on 2 hour time frame, I go all in. All right, and you can go back in time also. Check the time that. Please don't buy gold. Okay, please don't buy gold. I'm begging you. All right, please don't buy gold. All right. No, don't buy gold. All right, don't buy gold right now. Unless you have $1,000 in your account, then you can risk, and you are willing to risk like $10 to $20, then you can buy gold. But if you don't have up to that, please don't do it. Okay, if you have like $1,000, $2,000, $5,000 that you can risk 20 to 30 to 40 to $50, then you're good to go. Don't forget, you have to think about the loss first before you think about the profit. That's the way I'm training you up. That's the awareness I'm building for you guys here. So you don't fixate on the profit all the time. All right. Good. So moving forward, gold buy is fair, good, but not for everybody, especially for those people with smaller accounts. Okay. If you have a prop challenge account that is around 5K, then you can smash back. But it doesn't mean it will even win because you can see it's been ranging. This is more like an accumulating phase. Lower low, lower high, lower low, lower high. It can drop right now, and this trade will be lost. So please, if you don't have any, if your account is not in thousands, don't touch gold. All right, place and place, don't touch gold. Euro dollar is going up. Someone said Aussie dollar. We're still going to this euro dollar. Where is Aussie? We're still going to do recap later. Let me just talk about BTC. Then we talk about Aussie dollar later. All right. So BTC so far, you can see this trade yesterday. It had profit, then it went back up. Bitcoin right now is doing its own things, but it's still very much bullish on the 2 hour bands. So let's see how it goes. If you break above here, pull back nicely, we might get it to continue to be testing 73K. All right. It almost touched the all-time high last week, but it didn't. All right. So let's see how BTC go moving forward. But so far, so good. It is still bullish. Higher high, higher low, higher high, higher low, higher high. All right. So it is right there. It's right in front of us. We just have to be able to see it very clearly. So let's just be patient and see how everything plays out on Bitcoin as far as I'm concerned. Very bullish, still patient, and let's see how it goes. But if you don't have up to $1,000, also if your account is not in thousands, please do not touch Bitcoin. So now finally, let's do a little bit of a recap, and then off we go. So Euro GBP, I'm still holding a little bit trade on it. It's currently in a drawdown. Let's see how this goes. Euro USD, we just took a buy this morning, and right now it's doing very well. Let's see how that goes also. Let's see how that goes also. Okay, I think that was my internet. Yes. Okay, it's back. So USD CHF on the other hand is dropping down right now. Let's keep a close tab on it. I'm not sure we're going to take this sell immediately once it crosses below here, but I think some of us might give it a shot. I might give it a shot, but I'm not so confident. I'm not so confident about it. Although on the hourly time frame we have a crossover, the market is slightly above the 50%. It didn't even cross above the RSI 50 over both level. Okay, it didn't cross over it, so that might be another confidence for me to probably chill and wait a little bit. But the issue here is the moment we wait too long, all right, we might not be able to get into it again because there were no severe. Okay, I think we have a level right here that the market could use as area of support and resistance. Okay, so maybe we get something like this, the market drop down, pull back, then we can start looking for a buy. I mean, a sell right there. Okay, maybe, just maybe. But aside that, I think a sell here is good, right? We have a little slight and unconventional structure inside the range. But let's see how this goes. Okay, don't rush into it. Like I said, one trade is enough for anybody with account below $100. Two trades, I mean, below $200. Two trades is enough for anybody with accounts below, I mean, above $500 and below $1,000. Okay, so the your account ranges below $1,000 to $500. You might take a look at the CHF sell, but if not, just stay on $0 only and have fun. Okay, I've said my own, I've said my piece. The rest is left to you. Okay. Moving forward, we have USD JPY. Okay, we have USD JPY, and that is still building up. Nothing yet from that end. Aussie dollar is spiraling up as we expected. Let's leave it alone. I thought probably someone saw it on 1 minute time frame, and that's why I said, what of Aussie dollar? You don't want to buy at the top here. It doesn't make sense. Let's leave it. Let's leave it alone. Let it build up. Okay. Builds up. As a matter of fact, by the time if it breaks up, you might be thinking, I could have taken a buy here, close it. When it pull back, I will still take another buy here, then wait for it to go up. Yeah, that might happen. But at the same time, I've tried it before. It's just like, you know what that's called? Pursuing the market. Okay, you're pursuing the market, you're running after the market. And I don't do that. It's not something I do. I don't advise that. I don't teach that. So I'm not going to do it. I'm just going to wait for the market to break above there, go back nicely, investigate patiently, and then look for buy. We already have higher high, higher low, higher high. Then let's wait for pullback, and then let's see the market go. So we are waiting for two things now. We're waiting for the break of this structure, the pullback, and then we take an entry. So 1, 2, 3. So we're waiting for three things. It is worthy of waiting for. All right. Don't forget the market is also at oversold. I mean overbought. Don't rush into an overbought, guys. Don't rush into buying from overbought. You want to buy from oversold, not from overbought. Okay. You want to sell from overbought. All right. So be careful. And I'm not saying you should sell right here at the top here. Okay. If you're selling at overbought in a bullish trend, you're doing yourself. All right. So that's that on that. I will see us tomorrow. I hope you enjoyed this. Let's keep a close tab on Euro. Let's not forget, once we trade run in 20 pips, let's start trailing. And then I'll see us tomorrow. Let's have a great day. Bye for now.